Hey everybody, Kevin here with another episode for you of the Real Estate Without Renters podcast. And yes, I know it's been a couple months since I've done one of these, but I've been putting out a lot of good free content for you guys almost on a daily basis. If you follow me on Facebook, X, Instagram, and YouTube, I post a lot of content there for you as well. But I like to do the podcast when I have a good guest in mind, and I've got a great guest for you here today. I think on an important topic because, you know, the topic on this podcast, of course, is always about notes and real estate. But the reality is behind all of these notes in real estate are people. And a big part of this business is networking, building up a reputation, getting to know the proper buyers and sellers, and expanding upon your business, because essentially everybody at some point in time in this industry runs out of their own money to buy these notes. So that means you got to rely upon other people's money. And a great way to do that is setting things up through meetup groups or local meetings, anything that you can do like that. So I've invited my old friend, Dave Franecki, to come on here and spend some time with us. Dave, always great to see you.
Hi, Kevin. How are you?
I'm doing great. I was excited to see that you're getting back into notes. I know you kind of deviated a little bit, and now you're back. You see some things through the crystal ball, so to speak, but also notice that you're restarting your club. A meetup, I guess, is more proper, out in Phoenix, which I came out and spoke to a couple times, years ago. So good to see you doing that again.
It's a Note Investors Forum. It's going to be at the same restaurant, and it's going to be on the 21st at 11:30. That's a Wednesday, and we've already got 30 plus people signed up.
Yeah,
it's like, from my perspective, I lived through a lot of pain with all these cycles. And there's another huge cycle coming up. And I feel there's opportunity. I feel I can help people, and I think a lot of people collaborate. So I think it's going to be a painful time, but a great time.
Yeah, I'm going to start doing this video series, which I've recorded in the past, but I'm updating it on notes versus rental property, notes versus private lending, notes versus stock market, notes, because I think a lot of people, if they really looked at it, notes is pretty well positioned throughout the years now, but when there's bad news on the horizon, that is going to be more inventory for us on the note side. And I tell you, I think I could make a strong argument against anybody comparing the note business as an investment in those kind of times versus anything else.
In this time, there's a lot of people over the course of the last, 15 years that have taken back paper. And with all the layoffs and the store closings and all the other stuff, those people work somewhere.
Yeah.
And that just creates opportunity.
Yeah, it really does. I've mentioned, I don't know, I guess on my tip of the day, maybe I did it on an update Wednesday, but starting more and more to see those cracks getting bigger. And the reality of it is, I had these stats in my tip of my tongue, but I may be off in these a little bit, everybody, so double check this. But I believe that Black Knight Financial with ICE, their stats said that 70% of the serious delinquent loans are all being held back because of forbearance plans, workouts, and BK13. And what's going to eventually happen is, at some point in time, because essentially the government buys all these notes, Fannie Mae, Ginnie Mae, Freddie Mac, and they're holding banks accountable more if those loans go bad. Now, so far, they've been telling the banks, hey, don't let these foreclosures show up as sales on the books. We don't want that on the public to see that. So you better work with these people and do forbearances, do whatever you have to do to keep them off the foreclosure books, because foreclosures are historic lows right now, 0.6%, which is artificial. There's no way that it's that low. And so they're forcing banks to do that, because the penalty will be, hey, banks, if you don't cooperate, if you don't get in line, guess what? We're going to put these notes back on you. Then we're going to have some real problems.
Well, here's an interesting thought. In January of 2007, Franecki told Congress that Fannie Mae is okay with a 10% non-performance rate right at that time. What happened 9 months later?
Yeah.
Everything hit the fan. Now, Fannie Mae's portfolio is 10 times larger. And in August of 24, today, it has 13% in default.
Yeah.
That's a huge number.
Yeah. Yeah. And it is a game of cards. And, everybody, well, I shouldn't say everybody, but most consumers, when they get a loan, they just think the bank is the loan is from the bank. And the reality is it's from the bank for about 30 seconds. And then it's immediately sold to Fannie Mae, Freddie Mac, and Ginnie Mae. And that's why we say the government, us, taxpayers, technically, we're the ones who own all this stuff. But the banks play that role of collecting the money and acting really as a servicing company. But Dodd-Frank is very clear that these banks are now held more accountable. And if Fannie Mae decides, hey, we think this bank is setting people up for failure, we're going to kick it back on them. But of course, again, that's where the problem starts to go. You could have a run on a bank where, between the treasury bonds, all the unrecognized losses on that, which is a whole different story, but also with all of these potential loans now being the bank's responsibility and on their books, and then having the 10 times penalty come in, it'll be disastrous. So I think they'll continue to try to hold it back, but at some point in time, man, it's got to happen, because you're right. Credit card debt not only is at record highs again right now, but so is the delinquency on credit card debt. Automobile debt, same thing. I'm looking at an article today that Florida's household debt increased to 7th in the nation. North Dakota's had a 27.8% increase in household debt between 2019 and 2020. It's 1 year. Texas is in there at second place, 19% increase. So debt to income ratios are going up nationwide, and yeah, it's going to be unfortunate. But the great thing about that you were alluding to, but we'll bring up to now, is we bailed everybody out the last time. We being the individual note investors. Wall Street couldn't do it. The government couldn't do it. So small investors had to come in and really work with people, and we were the ones that saved people from losing their houses, and that's going to repeat itself.
But the other thing that we have not talked about is the old, I think it was Sports Illustrated building in New York. It's on 50th Street in Midtown Manhattan. It's a 23-story structure. Do you know that sold at a 97.5% discount?
Jeez.
It also, Zales was in there, so was NYT. So this is coming too. And around Phoenix, you have all these corner strip malls. They're vacant with Amazon.
Oh.
That's the thing about any of that.
Yeah.
That's a books too. And they used to employ people.
Yeah.
Right? So there's a lot going on. And there's back in May, they were saying that 3,000 retail stores are going to close. That was in May. Now here we are in August. Big Lots.
Yeah, I just saw that they're closing 300 stores or something. Yeah.
Correct. And it just goes on and on. And Dell, here in Intel in Chandler, just laid off 15,000 employees last Thursday.
Hmm.
Now, what happens when their severance pay runs out? Think about that one.
Right.
How many of these payers are two income payers, and you lose one, you're kind of SOL after that. Yeah. So it's going to start cascading now. Not to be negative, but it is what it is.
Yeah, and that will affect property values, obviously defaults, and that's where the financing comes in, everybody. And again, if you're hemming and hawing about getting involved in this business, now's the time to do it and learn, because the inevitable is going to eventually happen. To what degree, still uncertain, because I'm sure there'll be some government stoppage of some kind. If they have no problem turning on the printing press, Yeah. But even that, good Lord, our national debt is just a staggering amount of money. But the inevitable happens, and there's a lot of money in the cleanup. There's a lot of money when you have solutions to the problem, and that's what our industry ultimately becomes. For the last 5-6 years, we've been focusing on performing notes because that's been the bulk of the inventory, probably 80-20, maybe 90-10 performing notes, non-performing notes, but starting to see that switch already, starting to see some more non-performing notes hit the marketplace. And I still think we're early on, but it's going to come, and there'll be some really, really good investment opportunities for everybody. And for those who, want to be in something that's also socially conscious as an investment, that's what this note business is all about. When we take non-performing notes and get them reperforming again, and that's going to be the name of the game. And that's really why you step back in, right, to the note business.
Exactly. And also to this point, Kevin, in '08, we dropped, 50 points, 50% value? If you do your diligence today and you base your property values on today's values, you're making a huge mistake. You better allow for a 20, 30, 40% drop cushion, because otherwise you're going to be you're not going to have a chair.
Yeah. And, to your point, we have definitely seen, and I don't recall seeing this before. Maybe it wasn't on my radar screen, and maybe I wasn't associated with companies that do this, but there's a lot of lenders that do private loans for rehabbers, of course, right? And that's gotten more popular. People are doing private loan originations and such, and through small companies or just one-off. And we're starting to see those short-term bridge loans default. And I'm convinced, I don't have real statistics to go into on that, but just logically, what's happened? Well, what's happened is the rehabbers are starting to rerun their number. They're starting to recalibrate and go, what could I sell the house for? Number one. Number two, my lumber and labor price is going higher and higher every single day. And they start recalibrating and going, I can't make any money on this. Why am I going to spend 4 months fixing this thing up to turn around and put it on the market for 3 months while I'm just bleeding money and I'm not going to make a profit? I'm just going to walk away from the loan and have it the private lenders have to take it over. And man, if you're a private lender and you're not watching your ratios, and you're right, if you're looking at after repaired value loans and stuff like that, you could be in for a rude awakening, because now you're into the deal too much.
You know what you do with the hard money lender? You cross collateralize. You tie that puppy up, that borrower. So if they leave, it really hurts them.
Yeah, I'm just wondering how many people know and how many people are in a position they just, look, in good times, everybody's doing those private loans, and hey, I'm making 12, how it gets, everybody's yield hunting, right? So, hey, I'm making 12%, I'm making 15%. Yeah.
Rich. Yeah.
Until something happens. So yeah, all those little numbers, they're not isolated. When you start to put them all together, we've got a problem. The time to identify it is now, and the time to understand what the solution is, because once again, there'll be solutions and there'll be money to be made. So you want to position yourself properly. So if you're in real estate, something related, you got to learn this side of the business. If you're in notes but have just been focused your education on performing, you better learn the non-performing side now. There's no question with that. Of course, I can help you out with that. I do personal consulting. You guys can reach me at kevin@kevinshortle.com and just have a conversation. I'll book a phone call with you, and we'll talk for 30 minutes and see if it's the right fit for you. And I think for a lot of you who listen to this program, I think you'll find it that way. If you're in Phoenix, highly recommend that you attend Dave's meetup up there. Where is that again? I can't remember the name of the restaurant. I know I've been there, but
it's a familiar restaurant on the southwest corner of Guadalupe and Dobson in Mesa.
You got like a meetup account that they can find it on their phones or something? Or
some Capital site, and just look under Note Investors Forum. So Capstone Capital USA.com, Note Investors Forum.
Okay. All right. So on your website. Yeah. Okay. Yeah. What's the website again? I didn't.
Capstone.
Capstone. CAPSTONE USA.
CapitalUSA.com. And then just go to the, as a matter of fact, Richard Thornton's just popped in.
Oh, no kidding.
Yeah.
Oh,
so
good.
Anyway, go to the site. There's a drop box there. You can fill in your information, reserve your spot, because I'm trying to cap it at 35 or 40 people. I want to keep it nice size. And then from that, we're going to take the folks that are there and break those down in a series of small masterminds. So have one major event every month and a series of masterminds, because people didn't want to lay out their dirty underwear, so to speak, in a meetup, but to a small group, because our goal is to get people, help them retweak their business and survive this and thrive. That's my goal.
Yeah. And you're right. I was going to, one of the questions I had on my side here that I wanted to ask you, but you're kind of addressing it now. I've helped the local club here in Orlando, which is no longer around. And I think it's no longer around because how do you handle new people coming in and older people who've got some more experience? The new people you have to address and kind of get them up to speed. Otherwise, they're lost the whole time and they're not going to show up again. The old people are going to sit back and go, "Oh my God, we got to go over, a contract for deed again." So you've got that dynamic. And I kept telling them, I said, start the meeting for the new people a half hour earlier so you can get them all up to speed. And then, you don't have the people with more experience just sitting there, waiting the whole time. So you're decided to break them into groups, and I'm sure you'll kind of section them out based upon experience levels.
But I feel I have to set the table, because a lot of people don't believe what we're talking about, you and I right now. So I've got to show some numbers.
Sure.
And then a solution. But the title of the meetup, or the subtitle, is Mindset Reset. You got to change your mind. You're thinking.
Mm-hmm.
You got to find a solution to make money and preserve yourself.
Gotcha.
That whole town. And I feel that there's a lot of people that are attending this meetup. They're a bunch of white hairs like me. We've got a lot we can share and help people with.
Yeah. And what do you think somebody, with what I do, and I know, but for somebody who may not, I work with people of all different levels, right? I'll work with people who are brand new. In fact, I was really excited. I got brand new guy signed up with me August 31st, Dave, and his name is Darren, and got him into a deal under contract by, July 31st, he signed up under a contract in August 6th. Brand new. He's kind of been kicking around, look at some of the free education online, and finally decided to take the plunge and work with me. And, I've got all the time, people who are new and getting going in the business and everything. But ultimately, some people want to get into this and really make a run of it, make it a full-time business or replace their income and that sort of thing. And that's where what I mentioned earlier is at some point in time, you run out of your own capital. So what do you do? And I think these meetups, I think there's a lot of people who should start them, but are probably afraid. Maybe they're lacking experience levels, or what are your thoughts on that for somebody coming up? Do you think you have to have a lot of experience, or you think you bring it all to the table? Or
partner with people that have the experience, and the one with the less experience be the subordinate or gopher, or whatever you want to call it. Learn and then break off. Yeah,
but you could be an organizer. You might not have all the answers, but you could organize and coordinate everything and bring people in. And I think there should be a lot more of those meetups. I know the meetups were hot for a while. Of course, COVID kind of blew everything up. But I think it's time for people to start to do that too. So if you're new in the business or have experience in the business or very experienced, man, get a note meetup together, because not only is it great to hear other experience, but inevitably you're going to be doing some business together, right?
But, Kevin, what I found too is before I put this out there, I called 5 or 6 trusted folks. Mm-hmm. I said, what do you want to hear? And number one, when I didn't say it directly, but the idea of just getting together face to face, eyeball to eyeball, none of this stuff here, and they want that. Yeah. And they want to be able to share where they are. They're embarrassed with their problems. They want to get them worked out, and we're there to help them.
Yeah.
And then, but more specifically, it's not just, oh, poor me. It's like, okay, let's turn this around and let's make some money. And there's going to be serious money here coming.
Yeah.
There's no question about it.
Yeah. How much time and effort do you think? I mean, somebody might be looking at setting up a meetup and then just going, God, it takes so much of my time or so much effort. Is it worth it or not? What are your thoughts on that?
I did this meetup for 5 or 6 years before the COVID stuff. I did 50, 60 people a month. I was doing deals all the time, partnering with folks. They wanted my brain.
Yeah.
So we split the deal. They funded it. It was all good. And we just rolled.
Yeah.
So for me, it's fun. For them, it was fun. There was one note after all is said and done of an outside party, the party, and that note went bad, a year ago? I helped him work it out, and he just tipped me, quote unquote, $1,000 to help me work through it. I didn't have to do it, but I did it.
Yeah.
That's the way it is. Yeah. You know who I'm talking about there. Yeah. So
I think so.
Yeah, down in New York.
Okay.
So
okay.
Yeah. So anyway, I just feel that this is a phenomenal, it's a negative jump that's going on, but it's a phenomenal opportunity to grow and to make money and reestablish your relationships. Because I've been so dormant, people thought I was dead. Seriously. But I mean, when you call them, so it's an excuse to call them and reestablish, and that's fun.
Yeah.
Okay?
And I think you're right on the face-to-face. I mean, I have to do a lot of stuff on the social media, today. You just do in the business that I have on the education side. But
right.
Man, I much prefer a live audience, and I always have. And going at networking events and things like that, they're just a heck of a lot of. It's more fun. It's more meaningful, and there's a difference. Relationships are better made in person versus over video screens and such. It's not quite the same thing. And I think we got to get back to that.
It's just not business. You develop some close friendships that way too.
Yeah.
And it's trust. But when you can read somebody's eyes, you get a sense if you can trust them or not.
Yeah.
Their manner, you hear about what they're doing with other people.
Yeah.
So that trust. But I need to say this too. Everything you do, you need to paper the living daylights out.
Right. Yeah. Always. Especially in this business. And just remember, everybody, if in real estate, if it's not in writing, it's not real. It doesn't exist. Right. You can handshake a deal with somebody all day long, and if all parties do what they're supposed to do, great, no problem. It's when things don't. If it's not in writing, you have no agreement. So yeah, we've got to. Hey, look, we're in the paper business, right? So paper things up.
Yeah, no, you've got to look at it. What is the worst thing that can happen here, and how can each of us be protected?
Mm-hmm. Yeah.
That's my thoughts.
Yeah.
You have to do it.
Yeah, 100%. And there's going to be people doing more and more things together, I think, too, because the opportunities are, I don't know if it'll hit like it did in 2008, 9, 10, because there's more laws and rules and regulations in there now. But even if it's half, it would be huge, and just so much opportunity. And I know that there's going to be bringing back. I was just looking at a deal the other day, and I've looked at so many notes. It's kind of funny. I'm working with a client, and saw a picture of it, and I said, "God, that property looks familiar. Let me check on my computer." And sure enough, I saw that property on a tape like a year and a half ago, and I still have it on my computer, right? So I'm like, I remember this one. And in the notes, it confirmed what they told us this time around when they were selling it. So the company who owned it didn't sell it back then because it was in foreclosure and that sort of thing. Didn't sell, but they had a note on there that says working on homeowner assistant fund with them. And right. Sure enough, this time around, the tape that I just looked at last week, the company who owned this note got $50,000 from the homeowner assistant fund to catch that person up on the loan. They've been making payments now on time for 4 months. It's like, there you go. And that program's going to be back again. And of course, that company's selling the note now. They just got 50 G's plus 4 payments. They're good. And they basically took a note, everybody not performing, got it reperforming, and now added value, just like if you bought a house and you fixed it up and you added value. Yeah. So I think there's going to be some great opportunities for that.
Other opportunities are days on market is going to start increasing for those assets online. If you understand seller financing and you can help somebody structure a seller carry deal, you can make money just consulting.
Yeah.
That's it. So you can go to agents, you can go to other investors that did bad deals, get with them, do the workout. Hopefully you know more than them. It's a win. Mm-hmm. It's continuing to develop your brand. That's my perspective anyway.
Yeah. And there is power in the groups. for example, even with my client base, you know, my client base is active enough where, and has been now for years, that I can go to some of these bigger buyers and say, send it to us first. I've got educated people. We've got capital. I guide them through the deals, and we can take advantage of that group momentum versus you trying to go to that one company yourself. You're not going to be able to work out a deal. You're not big enough, you know. But if you have like, wow, he's bringing, you know, 50, 60 good buyers to the table, then we can get better deals. We can get more deals. We can get first access, you know, to inventory. But I imagine that's going to be a part of your meetup eventually. You get enough people going who are looking for deals, you know, heck yeah, let's get together.
Yeah, this is not my first rodeo with the meetup. So, I mean, I'm just going to revive it to do it better.
Yeah. Yeah. And I was going to put together a live event out in Reno. I was going to fly out early to do that event out there with Madison and try to put something together. But I thought about it too late in the game, and I just thought, oh, it's going to be rushed, and I just didn't know if that gave enough people enough time. But I'm still in the works on something like that, so I'll let you know if I'm heading out west there, and can meet me up there, or maybe I could pop down.
We can sync up, yeah.
Yeah, work out the time.
So I was thinking about doing a subgroup of people that like to hike. Go out in the trail and talk about business.
Yeah.
I mean, if it's not fun, why do it, right?
Yeah. Yeah, that's going to be an early morning group.
Not in October, November. So anyway, I just see a lot of possibilities here.
Yeah.
And we just have to stay above the fray, but be aware of what's going on below us.
Yeah.
And go from there.
Yeah, understanding problems, bad news, but not letting that control you. Understanding it, identifying it, and going, okay, where's the silver lining? What's the solution here? And that's really the name of the game, because neither you or I love reading about all that negative stuff, but it's like you have to understand what's coming, and that's the only way to do it, is to just really read these publications. And you and I look at a lot of the same publications and such, and studies, and I think it's important, you know, to do that and understand what's coming down the line. And when you're prepared, you know, again, but see the silver lining, I think it's going to be.
One thing, Kevin, the CDC is coming no matter what, central digital currency. And you remember the name CloudStrike from about 3 weeks ago?
Sure.
So I was at an event where one of their top legal folks was there. And she said at that time that's a test run. So she said, look for before or after the election. My point is, when you're looking at this assets, notes, and I mentioned buying at a discount, you don't know where the money is going to be. So you really got to build a solution to allow for that change in valuation. Because more than just straight ITV, LTV, or whatever, you really got to look at the whole composite. I'm not trying to get political, but it's a reality what's going on.
Yeah. I hear you. So congrats on getting back in. I'm glad to have you back in the business market there, and getting the club up and running again, the meetup. And again, the website, everybody, capstonecapitalusa.com. And you can check out the forum there as well. And honestly, if you're there, like I said, he runs a great group, a good group of people. In the years past, I came out there and spoke for the group and found it really well done.
And Kevin, I need to edify you too. You and I met, 10 years ago or so?
Maybe more, yeah.
But everything that I learned, I'd say 90% of what I learned in the note business, I learned through you.
Wow, I appreciate that.
So if folks are looking at you to be their mentor, their consultant, I couldn't recommend a better person.
Well,
I've got to. And that's from an old white-haired guy.
Well, I appreciate that very much. I really do. So thanks, everybody, for listening to the podcast. Again, sorry, it's been a while since I've done one. But again, check out all the other content that I'm putting out there for you. In fact, I put a nice little 4-hour training. If you're still on the fence, little $49 is all I'm asking for that 4-hour training course. I mean, so it's basically a giveaway. and it's really good, really detailed. I call it no fluff, so it's not going to be one of these skimming the surface kind of things. And you can check that out on social media as well, and get that if you're still on the fence. And I think that will absolutely change your mind about where you're going to be investing in the future. So, Dave, thanks for being on, my friend. Always good to talk with you. Good to see you again, and thank you everybody for listening.
Take care.